Hello, everyone. We are here today with the first session of My Women Support Entrepreneur Empowerment Series. First, a little bit about My Women Support. My Women Support is a nonprofit organization founded in 2005 with the aim to empower women to be healthier, happier, and more successful. For the past 15 years, My Women Support has been providing consulting and counseling services to women and their families in areas of personal, professional, and business development. I would also like to introduce myself and our presenter for this session. My name is Parvane or Pari Saharkis, and I'm an international medical graduate, an entrepreneur, and small business lead at My Women Support. I own a small business in Mississauga, which is focused on reproductive health supplements. I'm happy to introduce Ari Janice, a small business specialist with BMO, the Bank of Montreal, and a financial expert at My Women Support. As small business owners and entrepreneurs, we are all familiar with the challenges of financing our business. From capital expenses to working capital, all of us have needed additional help to keep our businesses afloat. Many of us started by bootstrapping our business and getting help from our family or friends. But at some point, we realized that we need to look for more realistic and reliable sources of financing. Arid is here to explain the options that are available to us small businesses. With that, I hand over the discussion to Arid to introduce herself and explain what we will be learning tonight. Arid?
Thank you so much, Pari, for having me here, and thank you so much for My Women Support for having me here today. We will have this amazing, interesting session for all the small business owners or people or women who want to venture into business about what options for business financing is available out there for them. Myself, my name is Ari Janice, as you already introduced me. I work with the Bank of Montreal in the small business department and been with the bank for the last 7 years. Before that, I have been working in Africa, Middle East, and Saudi Arabia and Pakistan in different industries, primarily based in sales and customer service. So I have been very customer focused ever since I started working when I was 19 years old. I have 2 kids, I'm married, and I live in Hamilton, Canada, Ontario. And I am a part of My Women Support team, and I would love to use my expertise and knowledge in regards to business financing and any financial needs women or people out there have any questions they have, and that's why I'm very excited for this session today. So Pari, what we will learn today, that's the burning question for all the small business owners or people who want to venture into business, that what is out there for them, because when they are aspiring towards getting into business, the biggest challenge for most of the people is finances, and they don't have enough that the business requires to launch a new business or to sustain the business. There's always cash flow problems, because even if you are in a very established business, by the time the business receivables come, you already are negative and you're looking for money, and you are kind of handicapped because you cannot take on more jobs and projects because you don't have the operating cash flow for the business. So we will be discussing about the 2 different types of financing which is available for businesses out in Canada. One would be the non-government funded type. That will be primarily from your financial institutions. So it's not backed or funded by the government, but it is something that your banks can provide you. That's the first part of the today's discussion. And the second type of financing that's available for businesses, and keep in mind that we are focused towards small to medium-sized businesses right now. We're not looking into the big businesses. We are talking about small and mid-sized businesses. Second type of business financing available is through government-funded programs. There are a lot of different government-funded programs that are available out there for small to medium-sized businesses, and we'll talk about that in detail as well. So yes, that's our agenda today.
Very, very interesting, and I'm really excited to get into the slides and learn more details. So I'd like you to walk us through exactly what we should do as a small business owner For example, if I started my business very recently, a couple of years ago, and I'm looking for finances, where's the first place that I go to? What do I do? And how should I go about this? I think you have some information for us in the next slides.
Absolutely. And so, very good question, Pari. And that's exactly what everybody has in their minds when they're talking about launching a new business. So, my first word of advice is when you're launching a new business, and if you already are into some kind of a job or have some kind of an income, do not quit that job or that source of income and jump directly into the business. Why I say that is that most of the times the banks we're starting out with the non-government funded financing right now. That is when you go to your bank and you say, hey, I'm starting up this business, I've incorporated my business, or I'm a sole proprietor, I have a beauty salon, or I'm dealing with cosmetics, or whatever the business may be, a restaurant business, catering business, and I need some kind of funding for my business. So mostly what people do is that when they're venturing into a new business, they have two things in mind, that they need some kind of source of income to sustain the business when it's in the infancy stage. So they don't necessarily quit the job until the business has established itself. Second thing is that if you are more than one people involved in a business, so if one person is focused on establishing the business, the other person should continue with whatever job or other business or what they have, so that there is a sustainable source of income to finance or to help the business. Why? Because when you go to the bank, I'll talk about what options are available in the bank first and foremost. So banks have two kind of options available for their business financing. We have small business credit lines for business, and we have credit cards for business. So when you are a small business owner and you go to the bank, they look at the type of business you are in. First and foremost, you have to register the business if you are incorporated, or if you're a sole proprietor, you should have your master business license, and you should go to your bank and open up a business account, of course, because you want to separate your personal finances with your business, so that you can do your books and record keeping separate. So when you go to the bank, you open up a bank account, and then you'll talk to your bank advisor, financial advisor, about the financing options. The easiest thing to get is a line of credit for the business. That is the operating line, you call it, and in a small credit card. Credit card is also good because when you are doing your purchases or anything, you have a separate record of everything that you're doing through your business and not through your personal finances. So those are the things which are great to start off at.
Yeah, that sounds very important. I think like what I realize is that we actually should be trying to build a sort of a credit score for our business as well. The same way as we have a credit score for ourselves, we need to slowly build a credit score and credit history for our business.
Absolutely. And sorry, so let's talk about more about the credit history of the business and all. For small businesses, we take a personal guarantee to finance the business. What that means is that a small business owner, first I'll tell you what products are available and the qualifying criteria for getting qualified for this. So as I mentioned that the financial institutions usually have credit cards and line of credits for business available, small to medium-sized businesses. Now, every bank is different. I'll talk to you about BMO, for example. The maximum financing available for small businesses is between $120,000 to $250,000. That includes operating line and the credit card. Now, the interest rates, because everybody would want to know what are the interest rates for credit lines and all that. The interest rate starts somewhere at prime plus 2%. So prime is at 2.45 plus 2% is 4.45%. So that's the starting interest rate of a line of credit for business. That doesn't necessarily mean that as a business owner, you will get that low rate, because there are a lot of factors that are considered when the bank is doing your financing application. First is the type of industry you are in the business, the type of risk that is there in the business, your expertise in the business, your credit history, and your relationship with the bank. So based on all these factors, when the application is keyed in, the system decides what type of interest rate you would qualify for. Nevertheless, the interest rate would not be more than 8 to 10% if you have things which are more riskier, the credit score is not that good, stuff like that. Nevertheless, a credit line has much lower interest rate than the credit cards, because credit cards mostly are 19.9%. There's some credit cards which are like 14 or 15%, depending on the type of credit card features you have. So that's a very important thing to know. Second thing is that, let's talk about the, sorry, you had a question, Pari?
No, I'm listening. Very good.
Okay, perfect. Second thing, so we talked about the product that's available at the branch level in the banks, and the interest rates, and we also talked about credit scores. So keep in mind that as I mentioned, that the banks would take personal guarantee of the owner of the business to do the application. Having said that, what that means is that a small business owner is business himself. So you are the small business owner. So a small business doesn't have any separate entity yet, because it hasn't acquired any assets or any credibility or any standing of itself. Like if you compare a small business with Apple and Microsoft, Apple and Microsoft can go on own to get financing based on their assets and their shares and their dividends and all that out in the market. But a small business not do that. So most of the times when the clients come in and we tell them that, they kind of get a bit ticked off because they don't understand the concept of a small business and a big business. So when you are a small business owner, and keep in mind, all businesses, all the big corporations out there started where you are starting today as a small business owner. So everybody was small. Nobody went up overnight, right? So it's all about hard work and how you sustain your business in this such a competitive environment. So that's how we do it. We look at the credit score of the owner of the business. So the minimum credit score that is getting qualified right now is 690 or above. So anytime your credit score is around 690, 700 plus, then that's considered a very decent score to do an application. Second thing that we look at is the source of income. Now, we know that when a small business is launched, there's no source of income from the business. However, as I mentioned, that there should be any other source of income outside the business. That could be if you are a small business owner and you're launching your business, you have some kind of a job or any other source of rental income or anything of that sort out on the side. If you don't have that, you have another person who is on the business. Most of the times people start small with the family or close friends who they can trust. So I always advise people that when you're getting into a business, if you are, let's say, married and you have a spouse and you know that your spouse has a very good job and you want to focus on this small business as a female, as a woman, you have a passion in a certain industry and you want to launch something, then do have your spouse or a close relative or a friend you can trust on the business if you don't have any source of income. So then we can use the source of income of that business owner, and then that application can have a better chance. This is for new businesses. Now, if the business is already launched and it has some income, then what we look at is what the business owner pays himself or herself from the business each year. Then we will need the T1 journal from the business for the business owner. So that's how the application is done.
I see. Okay. I've also heard about the term commercial borrowing. I believe based on the explanation, this would be the next level of funding.
Absolutely. So this was all about small businesses. Now keep in mind that the small businesses are not, small business financing is not for non-profit organizations. So banks and financial institutions are looking for-profit organizations that will have profit so that they can pay back the operating line and credit card bills, right? Moving on to the second part, which would be, again, non-government funded through the bank, and that is commercial borrowing. Now, this is something a little bit for businesses who are a bit of a bigger size that have some assets in the name of the business. So that would not be necessarily very small businesses, but businesses who are a bit established, or even small businesses which have some kind of assets in their name. That is building equipment and stuff like that. So that is the commercial borrowing. Sorry, you were saying something, Pari? You had a question?
No. I'm listening.
Okay, so basically, second part of a non-government funded financing through the banks or financial institution would be commercial borrowing. So let's say I have a property. I'll give you a scenario so it's easy to understand. I have a property worth 500,000, and I'm running a nail salon. Now I want to expand and get some more equipment and different materials for my salon, and I don't have any mortgage on the property, or I do, but I want to refinance. So I would go to the bank and I would say, okay, I want another 100. And so this commercial borrowing will be for anything more than 150,000. Up to 50,000, you can get financing from the bank without any collateral. So what we were talking about before is completely unsecured, no collateral, based on the personal guarantee of the owner of the business, right?
Yeah.
Commercial borrowing can consider assets, equipments of the business, and use those as a collateral to get you a higher amount of financing to the business owner, because we are looking at something over 150,000. Up to 120 to 150,000 doesn't necessarily need any kind of collateral, because that can be done based on the income of the owner of the business and the good credit score of the business owner. So commercial borrowing would be something where we consider the business itself as an entity and not necessarily take a full personal guarantee of the owner of the business. Having said that, we still take into consideration the personal credit score of the owner of the business. However, we are more focused on the books of the business, the financial statements of the business, the assets of the business, and the profitability of the business, what equipment the business owns, and stuff like that. Those type of financing have always a fees to start off with. So the financial institutions, they have to go on a very high level to actually evaluate the business. They can also conduct audits and check your equipment, your property, your real estate, to see what you're showing on the paper is actually what it is. So it's kind of a second level of financing through the financial institutions that is called commercial borrowing. This is more for a little bit bigger businesses who have their own assets in their name and which can be used as collateral.
Okay, great. So we talked about the non-government funded financing, which is basically through our banks. These days, there's a lot of discussions about government fund that businesses have access to. And sometimes it becomes really confusing. Like we hear about Siba, BCAP, loan through the BDC, through the EDC, all these different acronyms. And at one point, we're like, okay, so what am I supposed to do here? How do I qualify for which one? And how do I go about it? If you could please explain a little bit more about these government-funded financing, especially related to COVID, and some of them are even always available, and we didn't know about them.
Absolutely. Absolutely. And I see, Pari, I do see as a business owner, you have a lot of knowledge about everything out there. And that's what a wise business owner does.
I tried to do my research, but even then, it's confusing. So I can imagine our audience is at least as confused as I am.
Absolutely. And I don't blame the business owners. As a business owner, you have so much on your plate. I'm a small business specialist, and I deal with business owners every single day. And right now, we are calling all the business customers at Demo. We are doing outbound calls to check what their needs are because of this time of pandemic and COVID-19. We are reaching out, and trust me, half the time business owners are so engrossed in sustaining their business that they lose work focus. And one person, and especially a small business owner, doesn't have that many employees, or maybe not even any employees, one-man show. You cannot focus on accounting, on purchasing, on keeping your books intact, and marketing your business. There's so much that a business owner does, and it's like so commendable, right? So making it easy for all the business owners out there, let me tell you a little bit more about the government funded loans or financing available. So let me tell you one thing. There is a lot out there. do not worry, we'll cover a few main ones, and I'll give you the resources and the link where you can keep tracking based on your business needs what type of funding is available out there from the government. Even I wouldn't know all of them because every province is different, every business is different, and they keep changing and bringing more and more government-backed funding through the CRA and government website. So some of the most common ones and the ones everybody is asking right now, and it's out there, is Siba Loan. Second one is Canadian Small Business Financing Loan. And the third one is BDC and EDC. So we're going to talk about each one of them in detail. First of all, we'll talk about Siba Loan. That is these are, again, government-funded loans. So Siba Loan, Siba stands for the Canada Emergency Business Account. That is this buzzword out there. All the business owners, I'm sure, are familiar with Siba Loan because they've heard so much in the news that the Prime Minister is saying or Premier is saying that they're doing this and this and this for business. Siba Loan is basically a loan that is for COVID-19 relief for all the small businesses. The maximum limit is 60,000. They had it for 40,000, but they increased the limit in December to $60,000. Now, these are the key things you should focus on and understand about Siba Loan. Maximum, it's a 60,000 loan. Everybody gets, if you qualify and meet the qualifying criteria, which we will discuss right now, you will get the full 60,000. And it's interest-free till December of 2022. So for 2 years, there is no interest on it whatsoever. So that's one amazing fact about it. And one important thing that you need to know is that the deadline to apply for Siba, if you haven't applied yet, is 31st March 2021. So you have another 3 months, almost 2.5 months left if you haven't applied for it. And how do you apply? You would apply through the website of your own business financial institution. So if you have an account with BMO, TD, RBC, whichever bank, you will go on their website or talk to your branch or your business, your bank, and call them, and they will tell you where the link is. It's all self-serve, and you have to apply yourself. That's very important to know. But don't worry about it because we'll talk about the qualifying criteria and what you need to have to be eligible for it. It's very simple and straightforward. If you think you can qualify under that category, just go on the website of your bank and you'll be seeing COVID-19 relief. Click on that, on the business link. All the banks would have the link on the website. One last thing that's very important and amazing. If you pay off this loan by December 2022, you would only pay 40,000 and you get to keep 20,000. So that's how cool this loan is. Yes, isn't it?
That's really great. Like $20,000 free money.
Forgiven, yes, because you are paying, because the government understands that these are tough times for all the businesses. So if you are able to pay back 40 by December 2022, then you keep 20,000. Now, if it doesn't work for you, that's fine. If you're not able to pay back the 40,000 in 2 years, and you need this money, then don't worry. Your 60,000 loan will be converted into a term loan of 1 year for 5%, only 5% interest rate. So basically, it's not that you have to pay it in 2 years. You can still carry forward the loan. It's just that it won't be interest free, and there'll be a 5% interest on it. So that's how it's put it. Any clarification you need, Pari, on it? I know you're a business owner and you might have some questions.
No, and this is good. It's just that if you could explain what is the criteria to be eligible to get this loan?
Oh, yes, Pari. That's a surprise. I will actually tell you right now. Don't worry. I'm just going to tell you right now what is the criteria, okay? So here we go. I'm going on the next slide and I'm going to tell you. Now, Pari, there are two categories or two streams of Siba loan, okay? That is, you can qualify under one of the two categories. One, the first category is payroll stream. What that means is that if in 2019 you had employment income from your business for 20,000 or more, then you're eligible for applying for Siba. In simple language, you're a business owner and you are paying yourself a salary from your business, and your salary from the business or your payroll is at least $20,000 or more, but not less than 20,000 in 2019, then you're eligible for this loan right away. So either you're paying yourself or you have employees that you pay. Uh, just as long as you have paid an employment income from your business as a payroll of 20,000 or more in 2019, you are eligible. That's one criteria of SIBA. Any questions on that, Pari?
No, that's very clear and interesting.
Yeah. Second category where you can qualify SIBA. So if, let's say, you started the business in 2019, but it was your first year in the business and you hardly made like 5,000, or even you didn't make any income because you were a new business. That's also not, because there's a second category. Because when Siba Loan came in, they only had this first category, and most of the businesses were furious because they couldn't cut through this kind of a criteria. So there's a second. Sorry?
They wouldn't qualify those kind of
Yes.
businesses.
Yes, exactly. So then there was another category that the government expanded the Siba loan, and that is the non-deferrable expense stream. The very fancy name, but don't worry about it. What that simply means is that if you didn't qualify under the first type of Siba loan, then the second type of Siba is if your non-deferrable expenses between March 2020 till December 2020 were 40,000 or more, then you would qualify for SIBA. Now, I will expand more on what that means. So you have a business and you're running a business and you have non-deferrable expenses. That means those are fixed costs on a monthly basis that you're incurring on your business that you have no break on. That could be your rent, your utilities, your internet, your office supply, your office supplies. Anything that is on a recurring basis that you are paying for your business and you cannot avoid it, that's a non-deferrable expense. So if your business had non-deferrable expenses of 40,000 or more in 2020, starting from 1st of March, that's when kind of pandemic hit us in full swing, till December of 2020, then you can apply for SIBA. So that's the second category. So people who are not qualified under the first, they tend to get qualified under the second one, depending on the operational cost of the business and the non-deferrable expenses. Of course, a lot of people who are working from home and they don't have that big setup and brick and mortar kind of a setup, then they might not have that many expenses in 2020. Then they might fall under the first category. So those are the two categories that you can qualify for, either one of the two, to apply for the SIBA loan for COVID-19 relief.
Okay. That's a lot of good information about SIBA. But what if we don't qualify for SIBA? Then what should we do?
Very good question. So,
And then who doesn't
sorry.
qualify? So there's also that. So not everybody falls under SIBA. So if you could please explain that to us.
Absolutely. So basically, SIBA loan, these are the only two categories that the government has for small businesses. Of course, there are other grants like to get the rent, wages subsidy and rent subsidy and all that. That is if you're paying rent and you want to waive it off, and if you have kind of employees and you have to pay wages to them, then the government is covering up to 75%. Those are when you have many people on the business. But mostly to boost the business, if you don't qualify under SIBA, then we go to point A. That was one option would be to apply for a credit line for the business from the bank, right? Because we are not looking at your payroll or your operating expenses. We're just looking at your income from the business or any other source of income that we can use. So if you don't qualify for SIBA, I would recommend that if you're looking for a little bit financing up to 40, 50, up to $100,000, you can definitely go to your local bank and ask them if they can give some kind of a credit line or operating line for the business. So, but moving on to what other government-funded loans are available besides SIBA, then that we can discuss right now moving on, okay? But before we move on, sorry, and leave SIBA here, just want to tell you that, again, even for SIBA loans, the qualifying criteria is that you need to have a profit. You should be a for-profit organization. If you're a non-profit organization, if you're charities or you're some kind of entities which are owned by other organizations, holding companies, community services and all that, you do not qualify for Siba. You have to be an organization which is for profit. Okay.
Yeah, well, that makes total sense.
Mhm.
Another scenario would be a situation where a small business is planning to make an expansion, like get a new commercial lease or purchase some equipment. And I've heard about Canada's Small Business Financing Loan. Can you explain to us what this loan is and how does it work? How do we apply for it and who is eligible?
Absolutely. So basically, yes, we are moving on to that one part right now, as
Yeah.
you asked. What is the Canada Small Business Financing Loan? So this is a federal government loan guarantee program, which is available to eligible borrowers, and I'll explain you more about it. Now, this Canada Small Business Financing Loan is the government is collaborating with the banks, and they're working together to give a government guaranteed loan that you can get through your bank, but the government takes the guarantee of the loan for financing, basically for your real estate and also for the improvement of your equipment. So that's what it is. So if you have, or if you're planning to get some real estate, and if you have some equipment and all, and you are looking at improvement of that, then you can definitely apply for that. And I'm going to move on and I'll explain you exactly what it is right now. So this slide is pretty small right now, but I'm going to actually tell you exactly what it is. Just a moment. I'm going to open up my other presentation where the slide is a bit big. One moment. So moving on to what is this loan, and I'm going to just explain you right now. And here we are. So basically, what is this loan basically, and who qualifies for that and all that? First is that this is the, as I mentioned, that Canada Small Business Financing Loan is a shared risk between the government and the bank. So definitely the banks will be more receptive to help you with this kind of a loan, because if you qualify, and we'll talk about the qualifying criteria just in a little minute, a couple of minutes from now, then of course you can get that loan if you qualify, and the government actually guarantees the loan. So basically what it is that you can get 10 years for leasehold improvements. So if you're looking for any equipments which are on lease, you can get a 10-year loan for improvements of those equipments, and you can get a loan for 15 years for real estate. So basically in that also you have two types. You can apply for real estate. You can actually use to buy real estate or refinance your real estate up to 15 years. Government will give you a loan and guarantee that. Or you can also get this loan if you have some equipments that you've leased, or you have improvements that you want to make on big equipments for your business. Then you can also get 10 years of loan for that. Now, this loan is for sole proprietors, partnerships, or incorporated companies. Again, it has to be for profit. And keep two more things which are very important for this loan, Pari, is that Canada Small Business Financing Loan, the businesses should not have a gross revenue of more than 10 million. So if your business has an annual revenue, gross revenue of more than 10 million a year, then you do not qualify. So the cap is at 10 million. If your business has more than 10 million in revenue and gross, then you don't qualify. And it also is only for businesses which offers services or products to public. What that means is that you are in retail and wholesale, and you're providing services and products to public, then definitely you are eligible for that.
I see.
So
And
any
I'm
questions on that?
assuming that when we say real estate, we are talking about commercial real estate.
Absolutely. Very good question, Pari. So, since we are talking about throughout business, any property, equipment that is registered or you're planning to register and buy in the name of your business, even if you're using a property for your business but it's in your name, would not be considered for financing, because we are totally focused on the business itself, and that's what government is doing. Government will take guarantee of the loan for the assets that you are purchasing or have purchased and want more financing against it as a collateral for the businesses. So all the business equipment and all the business real estate we're talking about, nothing personal here.
I see. And can you tell us a bit about what is ineligible activity and ineligible borrowers. So what would be the criteria of not being eligible, or what kind of things does it not qualify for this loan?
Absolutely. So basically, a very good question, and we'll definitely talk about it. So first, as I told you, that these companies will get qualified should be providing product and services to public in wholesale and retail primarily, and the businesses which will be completely ineligible and this loan is not for them is for businesses or borrowers who are in farming, non-profit organizations, holding companies, charitable or religious organizations, trust companies, uh, the companies whose primary businesses of rental of real estate. Again, financial companies who have finances for acquisitions of shares. So if I'm a financial management company and I'm buying and selling shares and I have a company, I've registered a company, I will not be qualified for this loan. Vendor take back financing. So if you are a vendor who is financing, like payday loans and stuff like that, you would not qualify for that. And also pre-existing term loan with regularly scheduled payment. If you already have a loan and you are paying on it through the government financing program, of course, if you already have one, you won't get another one. So those are the businesses who are ineligible.
I see. Okay. Okay. Anything else that we need to know about the Canada Small Business Financing Loan?
Yes, two more important things that I would say before we move on to the next type of business financing loan party is that the maximum loan value for this kind of loan, this Canadian Small Business Financing Loan, is not more than $1 million. So you cannot finance more than $1 million. And if you're using this financing for leaseholds and equipments, you cannot borrow more than 350,000. So basically, what it means is that the total borrowing should not be more than $1 million under this program. And for equipments and leaseholds, you cannot get more than $350,000. So that's what it is. Second thing is that in order for you to see how if you can qualify based on what you have in mind and what real estate or leasehold and equipment you already have, you might plan to acquire, you need to contact your branch and tell them that you need to speak with a commercial account manager or a relationship manager for commercial. So this goes towards the commercial side party, because this is on the second category, that is that the business itself is going to have assets in the business's name.
I see.
The commercial side of the not towards the small and mid-sized business, but towards a kind of medium to large-sized businesses which have acquired assets or are planning to acquire assets in the name of the business.
I see. Okay. So lots of information to think about. But I think at the end of the
Absolutely.
day, it's good to speak with our bank because you guys are the experts. You can guide us which way we need to go.
Yeah, but also keep in mind, as a small business owner, having a little bit of a research on your own. Like I know, Pari, you do a lot of research so that you know what is out there. Because sometimes if you just go to the branch person might not have all the information. So you would have to get in touch with a commercial account manager, a business relationship manager, the person who actually specializes in business loans, commercial loans, because all the government funded loans and the bigger loans are not dealt at the branch level. It's usually a big commercial manager who is sitting somewhere in a head office or is dealing with many branches and it has one central location. So you would like to talk to that kind of a person, and you sometimes it also helps to actually have a little bit of your own knowledge so that you also sound that, hey, I know what's going on there, I know what's good for my business. If you go with that attitude to your bank, then at least the person who's serving you also knows that this person knows their business. Right?
Yes, definitely. Okay, we mentioned a little bit about BDC, EDC loans, the BCAP. Can you open up this these topics as well a little bit for our audience?
Thank you so much. Yes, Pari, I'm going to just tell you about that right now. So basically now the third type, because we were discussing about the government finance loans, Pari, so we're going to talk
Yes.
about the Business Credit Availability Program, or BCAP, which has two categories: Business Development Canada BDC and Export Development Canada EDC loans. So basically, what it is, very good news for all the business owners, that the Business Credit Availability Program is something that the bank, the Canada launched, the government of Canada launched as part of the Canadian Economic Action Plan. So this government is taking some big action plans for the economic development of the businesses, and they came up with this. And it has two categories. One is the Business Development Canada loan and Export Development Canada loan. So what they are doing here, again, the government is collaborating with the financial institutions, and they are going to provide, and they are providing $40 billion in lending to businesses which have a viable business model. And of course, they will definitely look at your business structure and what is your business qualified enough, because there's a certain criteria for that. So basically, what you need to know is that this loan, the government has $40 billion out there to help businesses. And basically, what's happening is that it is used because they're giving incremental credit. So they're going to give you a kind of an operating line on an incremental basis to help with your operating cost of your business. So that's what this loan is all about. Now, we'll talk about a little bit. Sorry, you have any questions regarding that? I'm going to give you more details, but anything you have in mind?
No, good.
Okay. So basically, so let me tell you, it is again it's kind of a loan that is for small to medium sized businesses. It is what they are doing is the EDC loan. It's again a guaranteed loan, and they can allow to give new loans up to $6.25 million per business. So if your business qualifies, you can get over $6.25 million in your businesses. And the loan is guaranteed up to 80% by EDC. It's going to be a 1-year loan, and 80% is guaranteed by the government. And basically, it's 1 year plus you can get another 1-year renewal if you want. So the maximum is only 24 months on this loan. So this is how EDC loan works, and it's more towards the Export Development Canada. One of the things that you should have is like you're more in an export kind of a business, and you have exports. That's what this loan caters to, right? Any questions on that?
So this is the EDC loan would basically be suitable for businesses that are exporting or are looking to export.
Both. So what happens again, Pari, is that this is for both the businesses who are already exporting and who are also looking at getting into exports. Now, keep in mind, for a government or for any bank, for you to be qualified for any kind of a loan which is guaranteed by the government, you need to have a very viable business plan. And if you're already exporting, you need to have your books in order, your financial statements and your imports and your exports and all that. So you need to have all your paperwork in place before you go to apply for these loans, again through your bank, because the relationship or commercial account manager will talk to you about the actual paperwork that is required, and they would help you, because even if you don't have some paperwork about your business plans or your export proposal or your existing exports and all that, they will definitely guide you about what exact paperwork is required to get into this and see if you can qualify for this type of loan.
Yes. And last but not least, the BDC. Tell us a little bit about this. And I've heard a lot of good things about how we can get even small loans from the BDC. Can you please explain a little bit about the Business Development Bank of Canada?
Absolutely. So I would say BDC co-lending program or BDC loan is like a small brother for Export Development Canada or EDC loan or a little sister. Reason being that this is for something between 1 million to 6.25 million. So that's the range. And what second thing is that again it's 80% guaranteed by BDC. The good thing about this is that this loan can be used up to 10 years or 20 years amortization as compared to EDC that you have to pay back after 24 months or 2 years maximum. BDC is giving you more time to pay it between 10 to 20 years. And this is basically towards Business Development Canada. Again, you have a business plan, you're already into a kind of a business, or you have a proposal and you're actually getting into it. So this is for that type of a loan. And again, it has higher amortization, so you don't have to pay it back in 1 or 2 years. You can go up to 10 years, and sometimes case by case basis you might be able to extend the loan up to 20 years. Again, you need to have a viable business plan or an existing business and stuff like that to see if government can actually qualify you for EDC or BDC loan.
All right. And you did mention that this is between a co-lending program between the BMO, the Bank of Montreal, and BDC. So is this special to BMO or is it for all banks?
No, basically, I was getting the resources from the BMO portal because that's where I have access to. So I was getting the information. It is not just through BMO, it is through any bank. So what it means is that you can get it through any of the big 5 banks. You have to inquire to your bank. It is co-programmed with the banks, your financial institution in Canada. So all the banks would have BDC and EDC, not just specific to BMO.
Okay. You did mention that you will tell us where to go for more information.
Absolutely, Paris. So I think we should all make note as well that now keep in mind that there's so much out there. I was reading that they are coming up with a women and entrepreneur loan. Government is coming up with a black minorities loan. Indigenous people have another criteria where they can qualify under for small business financing. So government just announced that they're gonna invest so much, millions and millions of dollars in Canada to help minorities, Aboriginals, women entrepreneurs to expand and help the businesses. So there's so many things that are coming up, and the government is trying to launch. The best way to keep updated as a small business owner about what type of grants and funding you can actually get is to go on www.canada.ca/en/services/business/grants.html. Even if you search on Canada Business Grants, you will get this website of Government of Canada. Or if you search Government of Canada Business Grants, you will get a link. If you go on this link, it's so amazing. I was browsing through it. It will ask you the industry you are in, what type of loan are you looking at, what interest rate you have in mind, and why you want the loan. You just fill in the details and it will give you list of all the programs that government might have available at this point. So it will give you everything based on a little bit of information you key in on this website, and it will keep updating. And you as a business owner should always check on this website to see what's going on and what new programs government wants to launch or is in the process of launching for businesses.
Okay, great. That sounds very good, and I think we definitely everybody's going to be checking that out tonight. Thank you so much for your time, and a big thank you to our audience and to My Women Support, who have hosted this meeting, made it possible for us to have this discussion. I'm looking forward to seeing the questions and comments from our audience. Anyone that has any questions, any comments that can be useful for other small business owners in the community, Please send an email to crc@mywomensupport.com. I think that we will arrange another meeting where we can address all of those questions that go through the different scenarios that our community has sent for us. And on that note, I finished this presentation, and thank you again for your time.